Well, some positive news amid California's insurance crisis. 5 homeowners insurers have committed to staying and growing in California. That's according to the state's Department of Insurance. Those companies are Mercury, CSAA, USAA, Pacific Specialty, and California Casualty. The department says this is one of several signs of market improvement under the insurance commissioner's sustainable insurance strategy. But there are now 2 dueling ballot initiatives aimed at taking a different approach to solutions.
Last month, an independent insurance agent named Elizabeth Hammock submitted a ballot measure called the California Insurance Market Reform and Consumer Protection Act of 2026.
It's designed specifically with consumer protections packed in it, basically, and incentives for carriers to write.
Carl Sussman of Sussman Insurance Agency is in favor of the measure. He says it would make some major changes to Prop 103. That's the 1988 voter-approved measure that forms the framework for the state's entire insurance marketplace. For example, he says Prop 103 made California Insurance Commissioner an elected, not appointed position. The proposed change?
This proposition would require the insurance commissioner to have, wait for it, insurance background and a license, which I've never understood exactly how it hasn't been like that.
Carmen Bulber is against that change.
That is the definition of having an industry regulate itself.
She's the executive director of Consumer Watchdog, a consumer group that just last week filed its own ballot initiative called the Insurance Policyholder Bill of Rights in direct response to this other measure.
The measure that was filed by the insurance broker would eliminate the protections of Proposition 103.
She says Consumer Watchdog's measure would strengthen consumer protections by requiring insurance companies to issue policies to homeowners who protect their homes against wildfires, among other changes. Critics like Sussman say Consumer Watchdog's bill would further drive insurance companies out of the state.
There's things in it that would tank the insurance industry almost by design.
Bulber disagrees.
We've been looking at all of these various reforms in the Bill of Rights for many years now.
The first ballot measure would also remove a funding source for Consumer Watchdog. Prop 103 allows a group that intervenes in insurance company rate filings to help lower rates for consumers to be paid for their time by insurers. Consumer Watchdog, whose founder wrote Prop 103, is the main group that does this. The measure Sussman supports would eliminate that reimbursement, though not the intervener process altogether.
Prop 103 has consumer protections for things like discrimination and unfair claims practice. All of that stuff stays the same.
Both measures are jam-packed with changes and ideas, and it's not guaranteed either will end up on the November 2026 ballot. But if they do,
this will definitely be, the battle of the last 4 decades, at least, in insurance in California.
Both ballot measures are still in the very early stages of getting qualified for the November 2026 ballot. And there's a lot of fundraising and signature gathering that still has to happen, and it's even possible one or both do not move forward. We'll keep you posted.